people say cynically, Bob, why is Alphabet considered a great ESG company? And I guess the answer simply is that on the metrics that we are using and measuring, environmental, social, and governance, and with the way it is weighted, they are indeed better companies, and they do have a better weighting. Isn't that the answer? Now you can say, well, we should change the way they're weighted, for example, ESG, or we should change the criteria or how we quantify that, but isn't that the answer? The reason they're weighted heavily is because they do indeed perform better on the scales that you have created around them, around environmental, social, and governance issues.
Well, so here's the thing. When it comes to ESG, it is actually a very industry-specific thing. So while ESG, coming back to this kind of initial question of how this relates to what's going on at the moment, ESG is about aligning your investments with your values, but it's also much broader than that in terms of simply incorporating more information into the investment process for generating value as well. And so when you take a very industry-specific view on ESG, you're looking at non-traditional sources of information that are considered extra financial to various different industries that are still financially material. So you're not necessarily judging a tech company by the same standards you're judging an energy company, because they have different risks and opportunities that are relevant to that specific industry. ESG is simply the practice of putting more of this information into the mix and making a more informed investment allocation decision. It just so happens that a lot of these issues tend to align with people's values as well. So when you're looking at something like Alphabet or the various different companies you mentioned and what it is that makes them better than some of their industry peers, you're looking at an industry-specific relative comparison. Do they perform better on those environmental, social, and governance issues that are more relevant to the long-term success, sort of financial success of those businesses relative than their industry peers? And really, that's what ESG is ultimately about, a more informed investment decision making that takes all of this information into the mix.
And Bob, if I can add to that for a second, just a couple points. When we talk about the outperformance, it's because of the reduction of the energy stocks, and we know what's happened to energy stocks. We know what's happened to oil prices, and they may not be out of the woods unless oil gets back above $50 a barrel. Oil companies are going to have problems, and they're maintaining these high dividends at the risk of losing long-term shareholders if they don't maintain them, which is digging into their cash flow. I mean, you and I could talk 10 minutes on that. At the same time, pointing out the high conviction, some of the companies, for example, in S&P, those top 4 companies account for 25% of the market cap. It doesn't mean that they're doing that because they're have more conviction there. It's because they have less conviction on the energy stocks, which allows them to have more allocation to the right companies in those areas.
Right.
Maybe
Although, Mona, I would note you're not eliminating oil stocks, for example. There are oil stocks in the ESG index, right?
Precisely, yeah. I was just about to say that actually, as I mentioned, every ESG index has a specific objective, and the objective of this index is to, as closely as possible, track the underlying S&P 500. And so with that comes a similar level of sector exposure that you get with the 500. Instead, what we're doing is targeting the best ESG performers, or rather removing the worst ones, within index industry groups. So what you end up with is something that is broadly sector neutral. You still have similar levels of exposure to energy companies that you have with the S&P 500. It's just that you've got exposure to the ones that are better from an ESG.
So the point here is that Exxon might be, by market cap, the largest stock in the S&P energy sector, but in fact, in your index, I'm not sure about it, but Occidental might actually have the biggest weighting because it outperforms on ESG metrics. So, am I correct on that?
So actually, the weighting is based on free float adjusted market cap. So it's really just a rules-based selection criteria driven by ESG principles to determine whether a company is in or out. And once they're in, the weights are redistributed according to their market cap. So if you have a big weight in the S&P 500 and you make it into the S&P 500 ESG, you're going to have a big weight in there as well, perhaps even a bigger one.
Yeah, I get it. So I guess, Tom, the key point here is is all of this going to provide an additional boost to ESG? I think we've heard about the growing interest in it. I've heard about the commentary around it, that is it really capturing everything everybody needs? And as you see, Mona says you can do a lot of different things. You can be a lot of different things to a lot of different people. Do you think the investment in ESG this year is going to increase significantly? You mentioned the rather small sums that still exist there. Will we see a double this year? What will we see this year?
Well, it should at least double, Bob. And as you know, we're talking with advisors who are coming to ETF Trends and ETF Database all the time, and you're starting to see, just by the nature of them reading more ESG-related stories and looking at more ESG-related ETFs and digging down into their makeup, that there is definitely more interest there. The fact that there's been a little bit of outperformance is also great. And then on top of that, the higher conviction to work from home companies that are doing more business online, like Amazon. Just look at, from a comparative standpoint, the NASDAQ 100, 47% of the allocation there is with FANG stocks and Microsoft. And those are the companies that not only are doing well in this coronavirus environment, but probably coming out on the other end of this are going to continue to do well. And if those have high ESG scores, which they do, that does nothing but help improve the confidence of the average investor there. If they can not only invest in good companies from a profitability standpoint, but good companies from a value standpoint, it's the best of all worlds.
Yeah. Mona, people ask me this all the time about what exactly you determine the weightings to be in these. So we know this vague phrase, environmental, social, and governance. Can you tell us with this particular index, how much does environmental count versus social versus governance? It is a one-third kind of thing. I often get comments like, Bob, you can't really quantify this, that a lot of this comes out of qualitative analysis, like what the company's perception is in the public's eye or things like that. Is it possible to quantify what is essentially qualitative analysis? I know you're trying to do that, but do you feel you've been getting better at it? And briefly describe how the weighting goes in environmental social governance in this particular index we've been talking about.
Precisely, yeah. So what you've just touched on is really the difference between what I would say are two schools of thought on this. Some do take an equal weighted approach to ESG, primarily those that have a very strong desire to express their moral values through their investments, where they hold all of these issues equally important. But if you, the second is a materiality weighted framework. So if you come back to this definition of ESG as I do, which is that rather than simply or solely values-based investing, it is the practice of incorporating more relevant financially material information into the investment process, happens to align with our values in some cases, but it is in fact very relevant to the overall financial performance of companies. And this isn't necessarily something that's traditionally captured by standard financial analysis. So once you take that view of ESG, then you start to understand why sometimes different issues will matter differently to different industries. We might all care about something like gender diversity, but it's not necessarily the most financially relevant issue for all different types of companies. It's going to matter a lot more for those companies where having a more diverse workforce is really important for thinking through different scenarios more creatively. So it'd be better for companies that have heavy exposure to R&D or risk management. So you can start to see how there is a real mechanism or channel through which ESG can be financially relevant. So our approach at S&P Global is to take a financially material approach to this. We're really fortunate that the scores are based upon the renowned SAM Corporate Sustainability Assessment, which we acquired this year, formerly part of Robeco SAM, an asset manager. And so their approach to defining what is the most financially material issue, industry by industry, has been honed over more than 2 decades of real-life investment data. So looking at the portfolio and seeing what works and what doesn't work from a materiality standpoint in order to warrant its admission into the overall scoring process. Whereas a lot of other ESG data frameworks sometimes rely on purely academic or theoretical approaches to defining what is material. But make no mistake, ESG is about financially material information, even if it comes from non-financial sources.
Yeah, so your point is that you can quantify this stuff, even if it comes loosely from a qualitative analysis. Tom, Mona made a good point, and I think it highlights the strength and the problem with ESG, which is the problem being is it can be a lot of different things to a lot of people. Her point is ESG actually incorporates a fairly wide series of metrics. Some of that would be diversity and inclusiveness, but if you're a person who says, oh, I'm looking at these protests, I want more diversity and inclusiveness, I'm going to go to ESG, you may or may not be getting all of that, or you may only be getting it in a very small parcel. Do you understand what I'm trying to say? Because people keep asking me about this with different social metrics, and I'm saying the problem I've had with ESG is it can be a lot of different things to different people.
And index providers have different scoring methodologies as well. Managers have different scoring methodologies as well. But I think the key thing here, Bob, is there's more discussion about it. There are more people interested in it, but there are more people writing about it. Based on what we've gone through this last week, it's going to be interesting, Mona, to see how corporations actually try to integrate some of these global concerns that we're seeing right now into their corporate governance and what comes on. And I think, Bob, to your point, it'll be companies will be more vocal about it. I've actually talked to a few corporations this past weekend who were involved in the retail space that were affected by looting. And you know what? They're very compassionate. That you can imagine that they would be upset about what's going on, but they're compassionate to what's going on with Americans and racism. And I think we're going to see this opportunity where corporations are going to step forward and they're going to say, we've done this so far, but maybe it's not enough. We're going to take it a step further. And folks like Mona and their ratings will really, really be helpful in guiding these corporations to doing the right thing.
Mona, final word with you. Just give us the little, tie a little bow on this whole thing. Do you agree that the events over the weekend, in however unfortunate they are, particularly the looting part, is going to accelerate interest in social justice and inclusiveness, and ESG will be a beneficiary of that in some way? Or do you feel that they're sort of tangential issues?
More so than being a beneficiary, I think ESG is going to be the tool. It is the roadmap that is going to allow investors and society more broadly to hold companies to account, to make sure that the issues we care about throughout society, be it social justice, be it inequality or diversity or whatever it may be, is actually reflected in the companies that we're investing in. And ESG is rather the toolkit to allow us to do that. And make sure that companies are held to account and we actually have some ability to influence them through our investments.
Thanks very much. Very stimulating discussion, very timely, Mona. I'm very happy that you were able to join us, Tom, as well here.